Hi there, good afternoon. You're watching Your Stocks. I'm Angla Malu. With me is Sumaira Abdi. This is the show where we answer all your investment stock-related query. But first up, a check on the markets. It's a choppy day of trade. We're closing in on the lower end of today's trading range, where the Nifty, Sensex, as well as the mid-caps have all but given up all their gains. Now there are loitering around the 10,900 mark if you must for the Nifty. The Sensex 2 sitting with a gain of about 15-20 points. The Nifty Bank is the one which is outperforming with a gain of about 0.3%, but that's again off the highs of the day. Hi, Sumaira.
Hi, Mangalam. Good afternoon. And all markets look to have flattened out or actually turned for the worse, because even in Europe, say something like the FTSE has opened with about a 0.25% gain. So that has moved into the red, and the other markets too have sort of cut their lead a little bit. The Shanghai has ended flat. The Nikkei has seen about 0.5% in terms of losses. So all in all, it seems India is not doing too badly. But first up, these are our top stories. Market erases gains in a choppy day of trade. The HDFC Twins and ITC drag. Mid-cap index 2 falls in line. Banking stocks outperform.
Etihad wants to invest in additional equity in Jet Airways at a price of 150 rupees a piece. Wants pricing exemption from SEBI. That's a cnbc TV18 exclusive. On the back of that, the jet stock tanks.
A lot of stocks on the move. The Z Entertainment stock succumbs to profit-taking despite a strong earnings performance. KPIT Tech in the green despite a top-down miss, while Specialty Restaurants is locked in upper circuit post stellar numbers.
Former Deputy Chairman of the Planning Commission, Montek Singh Ahluwalia, bats for the coalition government format, says the proposition of a coalition not delivering good results is not true. Also adds that targeted income for the poor is not a bad idea.
The management of Syndicate Bank tells CNBC TV18 that 14 to 16% of their NPAs are from the exposure to Mudra loans. Union Bank says their exposure stands at 7%. All right, those are our top stories. It's time now to invite our two experts, Vijay Chopra and Rajat Bose, join in to answer all the queries on your stocks this afternoon. Gentlemen, good afternoon to both of you. The first call that we have is with Kamesh Vemuri, who's on the line with us from Hyderabad. Hi, Kamesh. Good afternoon. What's your question?
Hi, good afternoon, guys. Actually, I bought 1,000 shares of Ashoka Leyland. Okay, I bought Ashoka Leyland at the price of 125, but after that it dropped to 116 levels. So I averaged it again, and now it's about 93. So I want your suggestions. Should I hold it or should I sell it?
Okay, so after averaging, your cost is what, 115, 16 odd?
Yeah, 116.
Okay.
After averaging only, it is 116.
Okay. Okay, Vijay, first to you on this. Before I get to Vijay, actually some more news flow coming through. Aurobindo Pharma promoters have created pledge on 21 lakh shares on the 11th of January. The stock a tad bit subdued. We'll just try and get some more information on this if possible. But for now, Vijay, over to you on Ashok Leyland. 116 is the average cost. What should the investor do?
After 230. Well, if you ask me about the company, it's a good company and it's stuck around for a long time. No problems with the company as such. But the problem lies with the fact that, the CV sales are not increasing, and we have seen a tepid growth in the CV sales all over. It's Tata Motors or even Mahindra or other companies, and even, Ashok Leyland. So either the gentleman has to wait for a longer time and for his rates to come, or he can exit on rallies and get into a sector which probably looks good. I think that banking is more promising as of now as compared to the auto and larger auto, rather CV, commercial vehicle segment. So again, if he wants to wait, if he has that kind of appetite, please wait, and I'm sure that he'll get 116, 120 on the cards. But I don't see any fireworks happening in the recent times in any of the auto stocks, because overall my view on auto is that it would take some time before we see the actual auto sales coming up. We are also expecting some kind of a rate cut this can boost the entire auto pack to some extent, but yes, he has to wait or switch to banking to get better returns.
All right, wait or switch to banking. Rajat, would you hazard a guess on Ashok Leyland? What does the chart say? It was a star in 2017, but over the last 12 months, it has corrected 25%. Also, a larger correction seen from its high of around 160.
Yeah, good afternoon. What I would say is that while going up in 2017, the later months of 2017 and the whole of 2018, it has been forming a head and shoulder pattern on weekly chart. And head and shoulder is a classical bearish pattern, and it suggests that there is further fall ahead, and it can actually fall by another 10 to 12%. But in my reckoning, 85 to about 80 is a strong support zone for that. So my suggestion would be, if you can digest that, that is exit here and re-enter again around 85, between 85 and 80. That would be a better bet, because this stock on the daily chart, on the weekly chart, oscillators, everything pointing downwards. So probably it is going to headed down. So why continue to hold it? And 80 to 85 would be a better zone to re-enter, if at all you are betting on CV. Otherwise, if you want some switch, I would say JK Lakshmi is a good bet, NIT Tech is a good bet. These are stocks you can move on to.
All right, fair point there. With that, we have another query coming in from Archana Shukla, who calls us from Ahmedabad. Archana, good afternoon. All right, okay, it's an SMS, I believe. She has investments in AU Small Finance Bank, 300 shares at 740. Vijay, what would you suggest with regards to AU Small Finance? Valuations seem a bit high on that one, and the stock has been quite range-bound and choppy too.
Well, I don't think that it has taken the brunt as most of the other companies have done. So I think that, being a new listing and a new player on the block, it has performed reasonably well, considering the fact what kind of carnage we have seen in 2018 with, mid-cap banks. So I would say that this can come up to 750 odd levels. So as you get your price, you get out of this bank, get into the bigger banks. I think that, these are times when you should always be in the bigger banks, bigger companies, Nifty 50 or maybe top Nifty 100 companies. No point of being here or there. Because chances of going wrong in an election year are very low if you are in the likes of ITC or HUL or maybe the top rung IT companies or the banks, so to say. So I think that, he should get his price, and once he gets his price, he should switch to some larger bank.
Okay, switch to a larger bank. That remains the call. Up next, Nehal Patil has written to us from Mumbai. She has 136 shares of Bombay Burma, which she bought at 1,400 rupees, so making a loss there. Long-term investor here wants to know what she should do at this point in time. Rajat, first to you on this. The stock hasn't done anything, for a bit now. What should the investor do? She's losing a bit of money. Does she remain invested, or is there a better opportunity?
I would say it would be better to seek other opportunities, because although the stock is not showing any sharp downtrend, but it is gradually declining, and there are no signs of recovery, at least recovery in price movement from technical point of view. So my suggestion would be to seek a switch. I just named 2 counters. There are many others. I mean, Vijay can suggest that. So BBTC, if I were in her shoes, I would have sold out.
All right, Vijay, a word on Bombay Burma, primarily because, every time we talk about this stock, we talk about it in context with Britannia, where it holds about 50% stake. And how do you view investing in holding companies?
Well, it's not a very bad idea to invest in holding companies. Because these companies are in general stable, and we do not see much carnage if the companies they hold are stable. But yes, when the market cracks and we see carnage all around, there is definite correction in holding companies as well. So I would say that Britannia as a company I like, and I think that it's a portfolio stock, and as I mentioned earlier, that if you want to be in defensives, or if you want to be in stocks, they should be the larger ones. So I think in the FMCG play, Britannia holds a very huge promise. So BBTC, for that matter, it might trouble you for some time, but if you have a longer term perspective, I don't think it has an issue. It can surely go back to the levels where the person has bought, or even higher. So again, my target for BBTC longer term is 1,500. Yes, in the short term it might create some kind of problems. The moves are very sharp on BBTC. We have seen in 2018 that, the stock has moved very sharply. But again, it's a good company. I don't see a problem in the company itself. But yes, there are other opportunities available, as I said, banking and other areas where, money can be made. So that is one thing for sure. And another suggestion would be that he can probably shift to Britannia, which is safer.
All right, thanks a lot for that, Vijay, recommending a shift to Britannia, which is safer than Bombay Burma.